Welcome back to Gold Rush Crypto Daily. Today we have an absolute firestorm. Yonatan Sompolinsky, the brilliant mind behind the Kaspa or CAS protocol, has not only refused a Binance invitation but issued a direct, open letter challenging the exchange's ethical compass. This is the ultimate confrontation. Cypherpunk crypto versus casino crypto. It's not just drama, it's a philosophical integrity test for the entire market. And honestly, it's screaming a massive bullish signal for Kaspa. Before we dive into the open letter that sent shockwaves across X, do your part for the movement, smash that like button and subscribe. Let's unpack the biggest integrity test of the year. Our lead story comes directly from Yonatan Sompolinsky, also known as Hashtag, the co-founder of Kaspa and the mind behind the GhostDAG protocol. After being recognized and included in Binance's highly regarded top 100 blockchain people list, he used the moment not to celebrate, but to issue a powerful philosophical rebuke that speaks for the entire hardcore crypto community. He publicly declined the invitation to the Dubai Awards, stating that the decision was necessary to respect the, quote, avid Caspians who rooted for my Kaspa status. The core message, let them win or count me out. This matters because it's the first time a major innovator has used a Binance accolade to draw a line in the sand between true innovation and market speculation. Sompolinsky's letter is pure dynamite. He laid out a critique that many of us have felt, but, few have dared to voice publicly. He states that crypto has turned from a euphoric cypherpunk project to a house-friendly casino. This is like the heart of the conflict. He then references the popular classification put forth by another prominent figure, Wandro commercial crypto, casino crypto, and cypherpunk crypto. Sompolinsky argues that Binance should hold a privilege policy for the latter, for the projects built on foundational principles, not for quick speculative flips. He provides a damning comparison. Binance is quick to list a green frog meme coin, which honestly has no utility or underlying technical innovation, just 3 weeks after its launch. Yet they skip a fair-launched Nakamoto Consensus 100 milliseconds upgrade ATH Top 20, the only non-Bitcoin marathon mined project, a clear reference to Kaspa. This isn't just about a listing. It's about the exchange molding the market in a direction misaligned with the roots of the movement. So, for beginners, the term cypherpunk refers to the original movement in the 1980s and 90s, which was all about using cryptography to protect privacy and autonomy. Bitcoin is, honestly, the ultimate cypherpunk project. Now Kaspa is arguing that its 100 millisecond high-throughput version of the Nakamoto Consensus is the true inheritor of that lineage. This moment of defiance is, without a doubt, the single most bullish piece of news for Kaspa this year. Why? Well, because it puts the project's integrity on full display. In a world that's just saturated with paid promotions, ICOs, and pre-mines, Kaspa is saying, our technology and our principles are the listing fee. This act honestly preserves the moral and financial strength of the project. A project that is willing to turn down a major spotlight and potentially a lucrative listing for the sake of its original principles is a project you can trust in the long run. This is exactly the leadership the community needs, and it gives investors immense confidence that Kaspa will not compromise its value proposition for short-term gains. Sompolinsky's public stand is backed by the controversy we discussed in our last episode, the alleged $41 million listing fee demand. This is where, the philosophical debate really hits the balance sheet. So, the issue of the listing fee has been making waves lately, and community figures like Kyoshi Takashiro are really calling out the hypocrisy using Binance founder CZ's own words. CZ once tweeted, "If your project is strong, exchanges will race to list your coin. But Kyoshi's brutal correction? Correction. If CAS is strong, exchanges will race to list your coin. If you pay us about $40 million. This isn't just speculation or anything, this is the real tension between a decentralized ideal and, well, a centralized profit model. Okay, let's ground this whole thing in hard numbers and a bit of technical context. The reported demand was 3% of Kaspa's maximum supply, valued at roughly $41 million. And honestly, this request directly clashes with Kaspa's fair launch model. So, what is a fair launch anyway? Well, it means there's no pre-mine, no ICO, no VC allocations, and definitely no founder's reward. As Sompolinsky points out, Kaspa devs and early supporters fairly mined less than half what Satoshi and Hal Finney mined back in Bitcoin's early days. This is super important, because it means there's no central entity, no foundation, no dev fund, no early whale, sitting on a massive pre-mined token stash that could be used to pay a listing fee. The entire supply is distributed through mining, which makes it a pure proof-of-work, community-owned asset. So when Binance asks for 3%, they're basically asking the community to fund a $41 million payment. And honestly, That goes directly against the principle of decentralized distribution and token integrity. Sompolinsky argues that Binance listing fees are legit, they are just unfit for category cypherpunk. Hardcore projects, the ones built without those massive pre-mines, really need a different standard. Listing a project like Kaspa should be seen as a maxi bet on the core principles of decentralization and future utility, not just another cash grab transaction. So, this whole standoff is really a market signal that goes way beyond just price charts. It totally confirms Kaspa's value. Binance is asking for a massive sum because honestly, they know the project's volume potential and its technical strength are just undeniable. This $41 million fee, that's basically the market's real valuation of Kaspa's trading power. The fact that Kaspa is holding the line here preserves the most bullish factor of the project, its fair launched integrity. By not giving in to these centralized demands, Kaspa is making sure that every single token stays with the miners, the developers, and those long-term community holders. And, this is the difference between a project that can be easily controlled and one that's actually sovereign money. The gold rush mantra, right? Follow the money, not the hype. While the philosophers and exchanges are busy debating, the smart money is already making its move. The on-chain data totally confirms that the most powerful wallets in crypto are doubling down on Kaspa's integrity. According to Kaspa builders, the accumulation game is super strong right now. Whales are just continuing to accumulate KAS. In just a recent 24-hour window, major wallets added over 15.5 million KAS combined. We're talking about individual wallets grabbing 5.7 million, 5.9 million, and 3.7 million KAS each. That's some serious conviction. This is a crucial on-chain signal. The technical term is accumulation during controversy. When a project is facing a major roadblock, like being excluded from the world's largest exchange, you might expect panic selling. Instead, we are seeing the exact opposite. Deep-pocketed investors are viewing the controversy as a discount opportunity. They understand that the listing is a temporary hurdle, but the technical innovation is a permanent advantage. The whales are not buying a meme coin. They are buying the fastest, most secure, fair-launched digital scarcity available today. They are betting that the foundational strength, the cypherpunk crypto that Sompolinsky champions, will inevitably break through the centralized barrier. Accumulation in the face of FUD or fear, uncertainty, and doubt is the most powerful endorsement possible because it proves conviction. They are voting with their capital for integrity over spectacle. So, this accumulation is really the ultimate market validation of Sompolinsky's argument. The whales, they totally understand the game. They know that once Kaspa is listed on every major exchange, a process that'll happen, either organically or through some eventual compromise, the price is just going to adjust to reflect its true position as a top 20 technical powerhouse. They're locking in their positions at a discount, fully aware that the principles keeping Kaspa off Binance are exactly the same ones that make it a safe, decentralized, long-term store of value. Kaspa is literally the one project that the whales are actually buying because it refuses to sell out. This whole controversy has, honestly, elevated Kaspa from just a high-speed technical project to, like, a philosophical leader in the crypto space. It gives investors a real emotional stake in the project's success, knowing that every time they buy KS, they're basically voting for the cypherpunk ideal over that whole casino crypto model. Binance is, at some point, just going to have to list Kaspa to serve its user base. The real question is whether they'll adapt their policy to actually accommodate true innovation, or if they'll risk being seen as, well, outdated. Either way, Kaspa wins. So, what do you think about Sompolinsky's open letter? Was he right to decline the invitation and call out the direction of the industry? Drop your thoughts and questions in the comments below. Let's keep this crucial conversation going. Seriously, don't miss it. Subscribe and hit that bell notification for your daily dose of the crypto gold rush. And just remember, this is not financial advice. Always do your own research.